Welcome to the 10 stages of estate planning. I'm Spencer McGowan, President, McGowanGroup Wealth Management. Over 38 years, I've processed a lot of estates and I've seen every planning technique that I believe is going to be important for the presentation. This is something you'll probably want to forward to your kids and your parents to get them on the same page, and you can evolve as a family more efficiently. All right, we're a federally registered investment advisory firm, a fiduciary. We work with your CPA, we work with your estate planning attorney, and coordinate to help you make great decisions. That's part of our job as the financial planning entity, as your wealth manager. Here, on the estate planning side, we're going to talk about the importance of the financial advisory team's role and what needs to go to your estate planning attorney and your CPA. You practice, stage one, you practice estate planning likely for the first time when you filled out your 401k enrollment. You had to put a beneficiary. You were doing estate planning, and that's true on your IRA as well. It's important because that is processed to your beneficiary outside the estate. One other tip there, your contingent beneficiary, very important, because if this beneficiary is gone, then they just issue a taxable check to your estate. So get the contingent beneficiaries reviewed in there. Now, the next step is to choose who's going to process your estate. Your financial advisory team has a role in this, but choosing an executor or trustee, typically for the affluent families we serve, that's going to be the most competent child or the most competent niece or a nephew. Hopefully you have a buddy that could be executor or trustee that is a little younger that could fill that role if you're on your own. So choosing that is important. Difference between executor and trustee, about to cover it. When you create your will, you choose an executor. They go through probate. The other choice is to do a family living trust. Now, in a living trust, you choose a trustee, not an executor. And they become the successor trustee. You're the trustee. You can always take it back. It's revocable. But inside that, you have a pour-over will, medical directives, and that allows your trustee to easily take it over. These are the easiest processes that we go through as an advisory team because the successor trustee takes it over. It tells you where to distribute it. There's no disruption in the account. You don't lose access like an estate where it has to go through probate first. So the surviving spouse, for example, doesn't lose access to money, right? The surviving spouse would just take over, and then you have a successor trustee for when both have passed. This is one of the planning tools that we have isolated as being an effective step. It's worth discussion with your estate planning attorney if you're about to do a will or a will update. Now, the CPA, estate planning attorney, and advisory team have to be on the same page. We have a secure document vault where we keep a copy of every trust, every will, and we actually read them with the client so we know what to do. And if it needs to be updated, we send a recap email to the estate planning attorney and you can finish it there. That's a key part to the wealth management process. This, we came up with Trustee Boot Camp. Now, Trustee Boot Camp is for your executor and trustee initially. Very simple process. Let's take the trustee for a family or a beneficiary on the IRA that's going to be the executor. We get them in the database because they need to know who we are, right? And we keep confidence between, there's a silo of confidence between adult households. The information only flows if you say so, but it allows them to be educated on who we are, and they advance their knowledge. Monthly, they get an email from us with financial planning tips, market updates, and wow, you want your kids to actually have a financial plan. That's going to probably save you a lot of money if they're frugal and they're building wealth as opposed to being a spendthrift. Charitable planning. One of the easiest techniques, I'm going to give you 2 easy techniques and then we'll talk about some others that have worked. So when you do the charitable planning, let's say you're giving money to your church, all right? And with your church, you give them cash. So you pay tax on the money, then you give them cash, and then you deduct it if it's allowed to be deductible. If you have a required distribution from your IRA, you can actually just send it directly to that charity. And that there's no tax involved. It just goes out and you don't have to pay that tax. That's one technique. The other, if you have highly appreciated stock, it's easy to donate stock to a charity or your church or the animal shelter, wherever you want it to go. You can take a piece of that stock, the most highly appreciated, and it just journals to them. It's easy to do. You get a deduction for the full amount and you don't pay any tax and you get the deduction. That's an easy way to fulfill those charitable intents. Now, charitable remainder trust, you get the income for life and then it goes to the charity. You get a deduction when you put the money in. That's great. So you save a bunch of taxes and the charity knows they're going to get it when you're gone. Donor advised funds are a more sophisticated version of that, where you get to direct where an annual distribution goes and you get a deduction right then. All right, navigating tax changes. All right, well, first, the CPA question on deductions and preliminary returns. If you do a practice return with the CPA, that allows you to basically test an idea like a charitable remainder trust. Here on tax planning changes, right now, your estate, $13.61 million, no tax, you know, for each spouse too, right? So total $27 million. But anyway, that's going to drop at the end of 25 to $5.6 million. So it goes below $6 million. Wow, that's a huge drop. What does this help with? If you own a bunch of land, or your family has some land and it's highly appreciated, you don't want to force the sale of that land if it happens to go over the estate limit. And you can actually put it into a family limited partnership. You remove part of your $13 million, whatever it's worth at the time, you could make a family limited partnership, and what does that do? It allows you to maintain control, but you have continuity because you can put who's going to be in charge under what events, and that could preserve a dynasty for the land or the highly appreciated property or even your company. All right, adapting to life changes. McGowanGroup Wealth Management, when we sit down and we update financial plans, if there's life changes, then we're going to give you the next estate planning steps that triggers. All right, final stages, processing an estate. You don't want a rookie team processing your estate, especially if they don't even have a copy of your will and trusts. Well, here, we've done this. I've done it 38 years, and the team experienced, we are dedicated and devoted to making sure that it's done right and that we take the next generation to a higher level of understanding without disrupting the investments. Now, what we'll do next is simply give you the contact info. You can go to networthradio.com if you want to set a time to come down to the Crescent or a Zoom call. Then you can actually do that at networthradio.com or the McGowanGroup.com. Thank you for tuning in to the 10 stages of estate planning. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.